Hey everyone, it's Steve again. In today's video, I'm going to talk about the 5 steps on how to set up your Roth IRA and how to build it to $1 million by the time you retire. This is going to be a beginner's tutorial, so if you're someone who wants to start investing right now, this is going to be perfect for you. I'm also going to talk about the #1 mistake that I believe most beginners make, including myself, so this way you guys don't make the same mistake too. I'm going to preface by saying that this is not a get-rich-quick scheme. It's going to take some efforts, some discipline in building this portfolio. By getting to this $1 million, it's going to look differently for everyone because it's going to depend on how much you contribute into this account on a monthly basis, which I'll talk about the math in a little bit. I also want to quickly say thank you to everyone who participated in my poll the last couple of days where I was asking you guys what kind of video I should make on YouTube, and a lot of you guys seem to have voted for this video right here. Okay, so without any further ado, let's get started with how to build this Roth IRA. For those of you who don't want to watch the entire video, it's totally fine. I'm just going to show you what these 5 steps are. Step 1, I'm going to talk about how to choose a brokerage, talk about the customer support and the different functions for different brokerages. Step 2, we're going to talk about how to open up a Roth IRA, some of the questions that you're going to encounter on the form, which are pretty easy to answer. Step 3, we're going to talk about how to deposit money into your accounts, how to set up your checking account and linking them into your Roth IRA, and how much to contribute, because I know this is a question that a lot of people have. Step 4, we're going to talk about buying assets that are going to grow over time. I'm going to talk about the ones that I like to invest in, but in the end, you want to see what you're comfortable with investing in yourself, because remember, this is your money. You want to do whatever you feel most comfortable with. And step 5, we're going to talk about watering your plant and how super important this is, especially for those of you who are just getting started with your journey to financial freedom. So first things first, what is a Roth IRA? Why is it that so many people talk about Roth IRAs? Why is it so popular all over social media? And why is it that a lot of wealthy people love investing in a Roth IRA? Essentially, a Roth IRA is kind of like a piggy bank or a savings account, checking accounts where you can put money inside. However, with a Roth IRA, not only can you put money inside, you can use that money inside to buy assets that are going to grow over time. So these are kind of like the 5 points, 5 pros of opening up a Roth IRA. All that money that you put inside that you compound over time to $1 million, it's going to be tax-free growth. 2, all that money by 59.5 is going to be tax and penalty free. So when you take out your money at 59.5, all of that is going to be tax and penalty free. Of course, that's you following the 5-year rule, which I'll talk about in another video. 3, there are no required minimum distributions, no RMDs, which is very cool. You are not required to sell your entire portfolio just because you hit 59.5, 60 years old. You can actually sell off some of your shares, some of your assets within your Roth IRA, which is kind of called the 4% rule, which again, I'll talk about in another video. Number 4, there are no age restrictions on opening up a Roth IRA. You can be very young and open one up too. Number 5, there are no income taxes for inherited Roth IRAs, which again is very cool. Now, here's the thing, folks, because a Roth IRA is so overpowered, a lot of wealthy people will try to take advantage of it. However, with the IRS, they're going to say, hey, you can't do that. You need to we got to put some limits on you guys. So you can't just contribute like $1 million into this Roth IRA, let it grow, and then, I don't know, over time, it'll be like $20 million. All of that is going to be tax and penalty free, right? So the IRS says that there are a couple of qualifications that you have to hit. First, you have to have a certain amount of income. So for 2024, your modified adjusted gross income, or MAGI, has to be under $146,000 if you're filing single to make the full Roth IRA contributions. Now remember that it's very important to always check irs.gov to see if this changes in the future, which it totally will. Okay, this number typically will increase because of inflation, but always check this number yourself, because for those of you who are watching this in 2025, 2027, 2030 maybe, everything in this video still applies except for this part right here where the rules are always going to be slightly different. 2, you need to make sure that you have earned income, like you have to have some paychecks, a salary, some sort of self-employment income coming in. 3, you need to have a social security number or an ITIN to open up a Roth IRA. And there are going to be contribution limits for every year. So in 2024, if you're under 50 years old, you can contribute up to $7,000 a year. If you're older than 50, you can contribute up to $8,000 a year. There are many people in America where they don't have any retirement or any savings, so they allow people 50 years and older to pay a little bit more catch up. So this is why they allow them to be able to put in more money on an annual basis. So why is it important to invest? Well, it's because, like what I've said in many of my videos in the past, a lot of Americans barely have any savings or any retirement by the time they get to 60, 65 years old. And I really hope that everyone watching this one day, that you guys are able to gain your own financial independence, that you don't need another financial advisor, you don't even need me anymore, that you're able to gain your own autonomy with building your wealth by yourself. Of course, in the beginning, it's going to be kind of scary because we were never taught about money growing up. But once you learn about it, I promise you it's going to come second nature. Now, even with these scary statistics on how half of Americans barely have enough, there is going to be a lot of light at the end of the tunnel, because if you take a look at a lot of these statistics here, more than 80% of millionaires are actually self-made. And it's not because of inheritance or maybe they had crazy, super high income jobs, but it's because of the wealth habits that they've implemented early on in life. These are the habits that I really hope that you guys are able to kind of learn and build for yourselves too. Okay, so step number one with this whole 5-step process. Step one, we want to make sure that we choose a brokerage, a reliable brokerage. So the ones that I like to recommend are from Fidelity, Schwab, and Vanguard. I personally use Fidelity and Schwab, but you can use whatever you like, okay? This isn't sponsored or anything, but these are the brokerages that I've been using for several years. I know that there are many other brokerages out there, but remember, this is a beginner's video. I want to make sure that I don't give you so many options where it gives you a lot of decision fatigue. That's why I'm just narrowing it down to 1, 2, 3 choices, and that's all. And you're going to see this pattern throughout this entire video here, because this video is strictly for beginners. So if you're someone who likes customer service and you want to get a higher interest on uninvested cash, really Fidelity is the way to go. This is the reason why I'm using Fidelity. Or if you are someone who likes to sell covered calls, or you want to start selling covered calls later on, if you don't know what covered calls are, don't worry about it. You can watch my other videos on how to sell covered calls for income, but you can also choose Schwab because, of course, they have great customer service and they have an amazing, easy to use platform. Okay, so how do we set this up? You're just basically going to go on Google and type in the brokerage that you want to open up your Roth IRA with. So you can go to Google, type in Schwab like this, or you can type in Fidelity, and it typically will show up as the first result in the search. Step two, we're now going to open up a Roth IRA. Once you choose your brokerage, like for myself, I'm showing Fidelity right now. I'm on their website. You can then look for the button where it says open an account. It's usually like a huge button somewhere in the middle or on the top right hand corner, and you can click on it. Once you click on it, there's going to be a whole bunch of different accounts that you are able to open up. But remember, this is a beginner's video. I'm just going to focus on the Roth IRA. So you can click on open now for a Roth IRA. Once you click on that, you're going to be shown this form where you're going to fill out some of your personal information, like your full name, social security number, birthday, phone number, email, so on and so forth, and even how much you earn on an annual basis. Step three, we're now going to deposit money inside. You're going to connect your checking account or your savings account to your Roth IRA, which is very easy. I'm going to show you how to do this in a little bit. Now remember, the amount of money that you can deposit into a Roth IRA depends on your age. If you're under 50 years old, you can contribute up to $7,000 a year, or if you want to break it down into smaller chunks, that's around $583 per month, or around $20 a day. If you're older than 50 years old, you can contribute up to $8,000 a year. Breaking it down again, that's around $666 a month, or around $22 a day. Again, it's very important that you guys check irs.gov because these numbers are always going to change. Okay, so how do we do this on Fidelity? So once you sign in, you made the account, you sign in, you go to the dashboard, you're going to look on the top left-hand corner. There should be a button where it says transfer, just like what you see right here. You're going to click on that. This drop-down is going to then come out, and you're going to click on EFT to or from a bank. Once you're there, you're going to link up your checking accounts, which will take probably 3, 4, 5 minutes. And you're now going to deposit money from your checking account into your Roth IRA. For me, what I would do is I would set the occurrence to recurring, because remember, with anyone who is successful, they need to make sure that they do things on a consistent basis, which I'll talk about for step number 5 in a little bit. So just hang out in there, okay? So we want to make sure that we're always, quote unquote, watering our plants. We're always putting in money into our accounts. A lot of people think that in order to become wealthy, we just have to invest once, this one time, this 1 month, and then that's it. This is completely far away from the truth. We need to make sure that we are consistently depositing a little bit of money every month and just kind of compounding our portfolios to that $1 million. It does not work if you do not put money into your accounts on a monthly basis. All right, folks. I'm going to set the frequency to monthly. You can set your start date here, and then I'm going to type in the amount of money that I want to contribute on a monthly basis. So because I'm under 50, I'm going to type in $583. Once I'm done, I'm going to click on continue and go to the next page. All right, so here's step number 4. Once we have money inside our Roth IRA, we need to buy assets within the account. A lot of people think that just because you put money inside a Roth IRA, it's going to automatically grow. No, this is not true at all, folks. Okay, a lot of people made this mistake, including myself too, when I first started with a Roth IRA. Once you have money inside, you have to buy things that are going to grow over in time. So you can buy stocks, you can buy ETFs, which I'll talk about in a little bit. But because this is a beginner's video, for myself, if I were to start over as a beginner, I would just focus on buying S&P 500 ETFs. So why is this? Well, as a beginner, there is a lot of confusion with the stock market. You don't know what it is that you want to buy. It's kind of like going to a grocery store. You go down in the cereal aisle. You're like, oh, should I buy Fruity Pebbles or Cocoa Puffs or whatever it is? And you get a lot of decision fatigue, right? Same thing with the stock market. You don't know what companies to buy. Should I buy Microsoft or Nvidia or AMD or Visa or Home Depot, McDonald's, Pepsi-Cola? I don't know, right? So what you can do as a complete beginner is you can diversify your portfolio just by buying ETFs or some sort of low-cost index fund. An ETF is basically an exchange-traded fund. It's kind of like a basket of stocks where when you buy one share of an ETF, you're essentially going to buy a whole bunch of these companies all at once just by buying one share. So when you buy an S&P 500 ETF or an ETF that tracks the S&P 500, you're basically going to buy one share and you're going to diversify across the top 500 companies in the United States. This includes Microsoft, Amazon, Alphabet, Google, Visa, Home Depot, Tesla, Nvidia. Most of the companies that you see around yourself in your room, in your office, outside on the street, if you see a brand, a company, most likely that company is part of the S&P 500. And by investing in an S&P 500 ETF, you're basically diversifying your portfolio across all of these top companies that are high performing, or most of them are high performing in the United States. My goal for this channel is for those of you who didn't have this financial literacy early on in life, like myself, that we shift our mindset from being a consumer, having a consumer perspective, like buying things that typically will lose value over time that are actually liabilities, into buying things that are going to be assets that are going to grow over time. And it's very similar to real estate, where maybe you buy a piece of property, a house, and maybe you buy a house for $500,000 right now in 2024, and you even get some sort of rental income, maybe $600 a month. Over time, that house is going to appreciate, right? So in 2064, the house might be worth $3 million. I know this sounds crazy right now, but this is really how the wealth building game is, right? How assets really work. They grow over time compared to other liabilities where they depreciate in value over time. Okay, so some of you might be asking me, Steve, what are these ETFs that track the S&P 500? There are so many of them out there. You can choose whatever you are comfortable with. But here are some examples. There's VOO, SPY, IVV, FXAIX, SWPPX, whatever it is that you want to invest in, it's up to you, okay? But all of these ETFs, all of these mutual funds or funds that track the S&P 500, they pretty much all do the same thing. So if you are going to choose an ETF that tracks the S&P 500, just stick with one and just keep building on that one. You don't have to buy like one share of IVV or one share of SPY and one share of VOO. Just choose one, because there are going to be some redundancies. This is also going to lead into selling cover calls in the future, where again, you just want to consolidate yourself into just one ETF, and that's it. I'll talk about how to sell cover calls against ETFs in another video. But if you take a look at my screen right here, this is VOO, which is a Vanguard S&P 500 ETF. And you can take a look at how it performed over the past several years, over the past 5 years, right? Just 5 years ago, the one share was around $270, and where is it now? It's around $500, right? It pretty much just doubled over the course of 5 years. And just like what I said before, whenever you buy one share of an S&P 500 ETF, you're basically buying all of these top 500 companies in the United States. And if you go to Yahoo Finance, which you can do by yourself, you can click on this little button on the left-hand side that says holdings, and you'll see all of the companies that are within this ETF. So there's Microsoft, Apple, Nvidia, Amazon, Meta, Alphabet, Google, Berkshire Hathaway, right? All of these companies are within this ETF. And when you buy one share, you're basically investing in all of these companies at once. If we take a look at the historical averages over the past several years, from 5 years ago all the way to 150 years ago, typically the S&P 500 gives around a 7 to 12% average annual return. Now, with me saying this, it doesn't mean that every year you're going to get around 7 to 12 or 10% returns, right? Every year. This is an average. So some years it might be 20, 30%. Some years the S&P 500 might be negative 10, negative 20%. We might go into a bear market. But over the long term, you're going to see that it typically averages around 10% a year. Now, if we go to this compound interest calculator, you can type in some of your own numbers. Okay, you can play around with your own numbers to see how big of a portfolio that you are able to grow attainably. So if I were to say that I start off with nothing at all, right? I type in 0 and I say that I'm going to deposit around $583 every month for the next 40 years, given that estimated interest rate of 10%. In 40 years, my portfolio will be around $3 million. But if you take a look at this graph even closely, it's kind of crazy because what you really contributed yourself is around $280,000 of your own money, and it grew to $3 million. Like, you got that 2-point-something million dollars in your account for free because of the compound interest. And folks, this is again why it's so important to shift our mindset into us buying assets for the future, because no one really becomes wealthy just by saving their money. It's very important to invest our money, so this way we can let our money work for us. All right, so let's talk about how to actually do this. So first, we're going to click on the quote button on the dashboard. So it's that little magnifying glass. When you click on it, you can type in the ticker symbol of whatever it is that you want to invest in. So right now, for my example, we're talking about the S&P 500 ETF, VOO. I'm going to type that in to the symbol, and then this is how we're going to buy one share of it, okay? Again, this is a beginner's tutorial, so I'm going to keep things simple here. For my action, I'm going to click on buy, set it to buy. For my quantity, it's just going to be one share. One share is around $504 right now. I'm going to set my order type to market because I'm keeping things simple. And time in force, it's just going to be day. I'm going to click on preview order and submit. And really, that's it. Like, now you have one share of an S&P 500 ETF within your portfolio. You are now a stock market investor. Here's step number 5. It's to water your plant. This is so important. As an adult, you do have this monthly homework, okay, folks? So this is the homework that I really hope everyone is able to kind of follow. Number 1, you're going to continue to live below your means. As an adult, I know that it's very tempting to want to inflate our lifestyle because of the things that we see on Instagram, YouTube, whatever it is. We see a lot of people with their nice cars and nice clothes, and we also want to treat ourselves, right? But I really hope that all of you guys can find some sort of happy balance with, yes, you want to treat yourself, but at the same time, you put away a little bit of your paycheck every month into your investments, into your Roth IRA. And by doing this, it's very important that you are very conscious about living below your means. I've made a lot of videos on how to budget, so you guys can check that out later on. Number 2, you want to make sure that you contribute money into your Roth IRA on a monthly basis. And this is why we set up those recurring deposits. 3, we then want to buy assets with the money that we put inside. We can't just put our money into our Roth IRA and just let it sit there, just like what I've said before. Because if you do that, it's basically going to treat your Roth IRA as a regular checking or savings account, which is going to do nothing at all. There are basically 2 things that you can do with the money inside your Roth IRA when you put money inside. So first, you can use the DCA method, or the dollar cost averaging method. Basically, all this is that you're going to buy 1, 2, or 3 shares of an S&P 500 ETF like VOO or SPY or IVV, whatever you're comfortable with, every month. You got to do this every month because you need to make sure you add a little bit of water to your plants. This is going to help you with the compounding effect, okay, in your accounts, which I'll, talk about in a little bit. So just hang in there. 2, you can also turn on DRIP, which is dividend reinvestment plan. And basically, whenever your S&P 500 funds give you some sort of dividend, which is going to happen every quarter, I made a video about this on how you can collect maybe $10,000, $20,000, $30,000 worth of dividends in your portfolio. I'll leave a link down below if you guys want to check it out later. But once you get those dividends, you can then activate DRIP, and all of that money will then get reinvested into the S&P 500 of your choice automatically without you lifting a finger. And this is typically something that a lot of beginner investors like to do because they like to automate things. They don't want to think about it. They just turn on DRIP and everything just goes on autopilot, right? So here's the number 1 beginner's mistake that most people make. People give up with investing because they don't see results right away. A lot of times people will go to the gym for maybe a week, 2 weeks, and they'll be like, hey, how come I don't have my 6-pack abs, right? And they'll just kind of give up on that because, they don't see any results. But here's the thing, folks. Just like with anything in life, with going to the gym, with eating healthy, we need to make sure that this is a lifelong journey. When it comes to wealth building, we need to make sure that we have these habits on a daily, weekly, monthly basis, that we put a little bit of money into our accounts every month, right? Regardless of where the stock market is, whatever the news says, with whatever negative news there is. Yes, it is very scary as a beginner investor to look at that short-term chart, because if you take a look at VOO on Yahoo Finance, like what you see right now, over the past 5 days, the S&P 500 has been going down, and you see the color. It's red. It's scary. But what I usually tell beginner investors is that you want to take a step back, zoom out. Where has the S&P 500 been over the course of several years? And this is what it looks like. So I'm going to get a little bit nerdy here with math, because did you know that if you were to invest just $100 a month, that becomes $500,000 over a course of 40 years with average returns. $200 a month becomes $1 million. $400 a month, $2 million. $1,000 a month, around $5 million. Now, if you want to take things even more simple and kind of look at that micro scale, well, what happens if you invest $10 a day, right? Just $10 a day for only 10 years. Of course, within year 1, you're just going to have around $3,650, right? Because, 10 times 365 days, that's around $3,600. I'm rounding these numbers just for educational purposes, right? And if you take a look at, well, over the next couple of years, by year 10, you're going to have around $57,000 because of the compounding. Now, if you decide, okay, Steve, I don't want to invest anymore after year 10, did you know that your accounts will still automatically grow? It'll be on autopilot, right? Because of the compounding interest, that you have your money within these assets that are still going to grow into these companies that are going to grow over time. So by year 20, that's going to be around $149,000. By year 30, $385,000. And by year 40, $1 million. Just by you not investing a single more penny into your accounts after year 10. So what's the takeaway message here? Just by looking at the first couple of years, it's like, wow, I only invested, $3,000. My account is only $3,000 for year 1. It's only $7,000 in year 2. Yes, it looks very small in the beginning, but after really you hit that $100,000 mark, that's kind of like the short-term milestone that everyone typically recommends. That's when compounding really increases. It really gets super fast. It doesn't take a lot of money to invest to grow a large account. What you really need is time on your side, because time is one of the most important variables for compounding interest, to growing your account exponentially. What's the takeaway message here? It's to invest early and to invest often. You got to do the boring, repetitive things that not a lot of people want to do, because this is really what makes successful people successful, right? It's just doing these things that you don't really see on the internet, right? That you can't really boast about. It's boring, it's repetitive, it's redundant. But this, I promise you guys, is the blueprint to success. Okay, so let's wrap it up, because that's kind of like the teacher in me. What are the 5 steps to building this $1 million Roth IRA? Well, first, we're going to choose a brokerage. So you can choose Fidelity, Schwab, Vanguard, whatever you're comfortable with, okay, whatever you like. Step 2, you're going to open up a Roth IRA, answer those questions. Step 3, you're going to deposit money inside. Hopefully you're able to max out your contributions for the year, right? $7,000 or $8,000, and you set up recurring deposits. Step 4, you're going to then buy assets like S&P 500 ETFs, funds, low-cost funds. Step 5, you're going to remember to water your plant every month, maybe using the DCA method or turning on drip. And remember, it's very important to focus on the long term and stay consistent, folks. If you guys have any other questions, you can ask me down below in the comments, or if you prefer to ask me questions live in a live stream, I'll leave a link down below if you want to watch my next investing live stream for beginners. You can literally just talk to me on screen and I'll answer all of your questions live. I really hope that you guys got a lot of value from this video. If you did, I really appreciate it if you gave me a like, or maybe just comment something down below, because it does help support me. Maybe you can give me a little bit of feedback if you're like, oh, this video sucks. I'm just kidding. Don't say that to me. That's kind of mean. But maybe you can give me some feedback on some other topics I can talk about, some things I can elaborate more about, maybe giving you some more visual cues. I can totally do that in my future videos, because I'm still figuring out this whole YouTube thing. All right, everyone. I hope this video helped encourage you to open up your Roth IRA to get started with investing. And yeah, I will see you all in the next video. Thanks for watching, everyone. Bye.